Well, good morning, everybody. It's a pleasure to be here this morning in the Guildhall. We are going to be talking for the next 15 minutes or so about tokenization, how the use of blockchain technology to tokenize money and other assets can drive a more efficient future. My name is Mark Simpson. I'm a partner at the law firm Baker McKenzie. We're in around 80 offices, and we're advising FinTechs in the UK and globally on product rollouts, expansion, and other legal matters affecting their business. I'm very fortunate to be joined by a stellar panel today. On my left is Victoria Thompson, the founder and CEO of Orara. In the middle is Matt Ong, the CEO and founder of Ctrl Alt. And on the far left is Gilbert Verdian, the CEO of Quant. So if I could maybe start by just asking you each to briefly introduce yourselves and your organizations. Victoria?
Hi, thanks, Mark. So I'm actually a reformed lawyer myself. So I used to be in-house inside banks for a decade plus and then stopped counting. And then in the middle of the pandemic, I decided to start Orara. So we started off with the use case of looking at financial inclusion and distribution of aid in the pandemic and helping people out in the UK. And now we're looking at how financial innovation basically can develop new products and services, specifically looking at distributed ledger technology, tokenization, and digital assets, and how that can really transform financial inclusion in people's lives. And more importantly, look at how we invest for sustainable innovation for impact of climate change. I'm also a bit of an academic on the side, and I teach within the computer science faculty, FinTech law and policy, and corporate innovation. That's me.
Thanks, Victoria. Matt?
Hi, I'm Matt. I'm the founder and CEO of Ctrl Alt. We are a tokenization platform specifically focused on real-world assets. So that can be anything from real estate to private credit to funds. We are the first in Europe to be a tokenization platform for institutional and retail investors.
Great. Gilbert Verdian, CEO of Quant. We create financial infrastructure to make all forms of digital assets and tokenized money interoperable. And I have a background in technology and cybersecurity for 20 years in government, but also in banking and NFS.
Thank you very much. Moving into the discussion proper, Gilbert, if we can start with you. Could you sort of start by explaining to the audience what we mean by tokenization and what do you see the key benefits to be specifically around digital currency?
So what we're seeing is finance has always been electronic. It's not digital. We think it's digital, but it's actually electronic. And the foundation of finance has been created back in the 70s, and that's what we've got today. And so we're in the transformational phase of going from electronic finance, which could be digital assets, equities, securities, and money, to digital finance. And tokenization is a form of that, where you use DLT technology to be able to digitize different types of securities, instruments, and money to give broader access to that asset and broader reach for settlement of money as well. So we are in the middle of in the beginning of a 30-year cycle of transformation, and tokenization is at the core of that.
And can you talk a little bit more about some of the benefits of programmability with digital currency in particular?
Yeah, so as we're making our assets and instruments digital, we're getting the benefits of what DLT brings, and that's custody, security, all the keys that you manage, but also programmability. And that basically means you're able to code in logic into the asset itself for the first time. You're able to code in logic and workflows into money for the first time. And by doing that, you're able to automate a whole bunch of workflows. You're able to automate a whole bunch of complex processes that took many FTEs and resources to do, and you can code that into the money and the asset itself for the first time. So it's really streamlining financial services. It's streamlining how we actually transact and how we actually settle, and on the asset side, and how we actually tokenize.
And Matt, just turning to you from the perspective of Quant and the role, from the perspective of Ctrl Alt and the role that you play, what are the benefits that you see from sort of both the tokenization of the asset classes that you deal with, but also with the opportunity maybe arising from a digital currency?
Yeah, so I think the problem statement that we address with tokenization is around access. So if you think about real-world assets today, something like private credit and something like a lot of funds are just not accessible to a wide audience. And coming on to your point about what that technology does, it helps to automate, as you said, a lot of those processes, which means that it becomes a lot more cost effective to provide that access, whether that is wrapping the asset or whether that is delivering that asset to an end user. So the problem statement that we address with tokenization is giving more people access to these investments, whether that's on the institutional scale or on the retail scale. When it comes to digital currencies, we definitely see tokenization as a phased process. And in order to get to that kind of golden ground that people talk about with full benefits of tokenization, you do need a digital currency to go alongside the tokenized real-world assets. And that's so that you have things like atomic settlement, so instant settlement and no T+1, T+2 times. And also distribution of funds. In order for that to happen automatically and very quickly, that needs to happen on-chain. And that requires digital currency to do that.
Great. And Victoria, what's your perspective on this? And I know you're obviously very interested in financial inclusion and what this can deliver.
But I think we just take it way back, because actually consumers don't care about tokens. They care about money, okay? They care about being able to access products and services and go on with their life and do it. And what we're talking about with tokens is actually data moving around within a ledger, okay? Banks are ledgers at their hearts. It's money in, money out. It goes where we send that information to regulators. We send that information to participants in that ecosystem, okay? What we're talking about with tokenization is the movement of data and the security around that, the information around that. And what's really possible with programmable tokens is that information can be shared easily. That's why Goldman Sachs did their DApp platform, and I worked on that and the operating systems around that when I was in private practice. That's why when I was at Development Bank of Singapore or Barclays or HSBC, all these places I've worked, that's where they cared about this technology, because it was about sharing that information with their customers, and internally it made it cheaper, faster, quicker, but also it made it more compliant. When I was doing experiments with MAS back in 2015 around what digital assets and tokenization could be, this is what they cared about. The regulator, they said, wow, that's better. That makes your compliance better. I can see the liquidity in that. When my students at UCL talk about that, that's what they think. And that's why this is an explosion. That's why it is the title of this subject. We are on the precipice of that revolution. And why it's really important in emerging markets, and why I'm involved in the conferences that's in Africa on this subject matter, or 2 weeks' time, why Albania and their central bank care about this, is because what it can do for then access, what it can do for the growth of the market. Because that's what tokenization can do. It can make it cheaper, faster, quicker, but it can also include a new segment. And that's what's really powerful about this. And I think that's what's great about IFGS, and what we're seeing in this conference is creating that dialogue, enabling people to come together to think about that. Because this is major infrastructure change that we're talking about in order to get that next level. And so we need an ecosystem to be formed to do that. And that requires lots of different participants, lots of different thought, if we're going to evolve this in a way that is beneficial.
And you touched a little bit then there on the path ahead. And what are some of the key challenges that you all think are out there in order for us to sort of increase the adoption and deliver its potential? Gilbert, maybe coming to you first of all.
I think being on the same page as regulators is quite important. So the regulation has been a key challenge, and that's been positive recently. So we're seeing clearer regulation come out. Institutions are very receptive to that, and they just want to understand what are the rules for us. Followed by standards. It's very important to create technology and market infrastructure that is standardized, because it makes it easier for institutions to adopt and change as they need. Integrating something into core banking is a very complicated process. They don't want to do that every few years. And then finally, it's a novel technology. So implementing that in a way where it benefits their business models, but also benefits how they use the technology to make it better, quicker, cheaper, as Victoria was saying. So for us, it's really implementing that foundational layer correctly at the beginning. And what we're seeing with the work that we've done with central banks, and now the work with commercial banks, is they're all working together. I don't know a central bank or a commercial bank that is not exploring, piloting, or implementing DLT in the world. It is that much of an uptake. And so what they're doing is, for the first time, rather than waiting for regulation to come down and say, you will go off and do this, they're actually collaborating and cooperating with each other to create this new infrastructure, because they have a seat at the table and have a say.
Yeah, I think, as I said before, I think it is a step-by-step process, and we are going through those steps. So, we are, starting to adopt tokenization at institutional level, and it's great to see as well, central banks and the regulator embracing tokenization, as we've seen with, the tokenization report that came out on funds that the Treasury and the FCA worked closely with industry groups on. But I think there's still more to be done there. So working more closely with individual players. The regulator has talked about the sandbox, and really excited to see what happens there. But I think working very closely with businesses that are innovating in this space, because while some regulation has changed to support tokenization models, there's still work to be done there, whether that's at legislative level, or whether that's individual regulators that need to bring in those changes. So very keen to see how these parties will work with individual businesses.
How about you, Victoria?
So I'd say there's classically three core barriers: knowledge, people, capital deployment. So we are still in an education phase, and that's why we're stuck in a central bank POC loop, and why we're having to have things like the kind of like Swift and MasterCard platforms to allow people to touch this, feel this. There is still that, because we're still in that innovation curve, and therefore then people need to educate, people need to learn about it, they need to understand it to feel like they can visualize how it'll become enterprise and scale. And then it's talent, okay? It's about people being able to access the talent that then can come and build and do this. If you are a computer science kind of graduate now, you can write your price tag if you understand how to come into this space. It's a real challenge, and as somebody who teaches in that space, I don't see enough women in that space. I don't see enough UK students in that space coming into my classes, and I really want that. So again, it's a call to the government, it's a call to the people in this space to fund and finance the grants that we need into that space, the investment that we need to get that talent into it, and also looking at our, let's be honest, our immigration and visa policies to be able to allow people that do have that skills to come here if they want to and be able to take up those opportunities. And then it's the deployment of capital. I mean, upstairs they talked about long-term sovereign wealth, pension funds not coming to invest in the fintech sector. We need to deploy the models that was done in the telco industry to allow that growth that happened in around about 2002, 2003. We don't have that in financial services, and that's the irony that we're talking about tech for banks. They have the capital, but they don't invest it themselves. And how we need more of that capital being deployed to talk about infrastructure investment. So companies like Quant, people that are there, that are really thinking about that hardcore infrastructure, we're getting that growth in that market. And I think that's the opportunity for pension funds that really care, for deeper investors and family offices and sovereign wealth to really turbocharge this industrial revolution and the possibility of tokenized economies.
Any other closing thoughts in terms of asks from government or anything else from anyone before we close up?
I think being ex-government, I can have a say. There's an opportunity for the UK to really excel at this, as Victoria was alluding to. We're at the forefront of a revolution in technology, a revolution of finance, and we've always had that capacity to do world-class, best-of-breed implementations of finance, and compared to anywhere around the world. So it's for us to actually think about what the UK should be doing for the next 30 years. And if it's creating tokenized economies, that should be our remit. The mandate should be we're transforming from electronic finance to digital finance, and UK is the epicenter of that. So let's do it. Instead of talking about it, let's work with colleagues, let's work with government, and let's work with regulators and make this happen.
Yeah, I think from my side, it's staying ahead. As the previous discussions have touched on, London in particular is the fintech hub globally, right? But we are being approached by regulators across the world to help them build their frameworks and push tokenization forward. And we're not really seeing that particularly from from within the UK, and that's a little bit frustrating. So, yeah, we would like to encourage that more.
Great.
I mean, I think we have an amazing legal and regulatory history and framework here in the UK. Our common law is seen all over the world as a market leader. We have all the ingredients for the most amazing opportunity right now. So let's put that together and let's deliver it. Let this be our export. Let us take this forward as the UK and give this and really move forward.
What a fantastic note to end on. Thank you very much to all of the panelists, and thank you for your time. Thank you.
Thank you so much.